Okay, here's a quick look at the emini S&P for Friday, June the 17th, 2011, through the eyes of emini day trader. And we always like to start by taking a look at the market profiles, and these are the market profiles that include the overnight session. Here's the overnight session. You can see it had that nice follow-through higher that we were anticipating after the market closed here yesterday. This was yesterday's profile, and this was today's, meaning during the regular trading hours. So, however, it could not really hold above that 72 to 78 area. It got up to 77.25 overnight, and then pulled in for the rest of the day. The possible transition up certainly has not yet occurred, and we're still more or less sideways here, with still a slightly downward bias. However, not a very strong sell-off today, although not too bad. It's sort of, I don't know, halfway, I guess. So we could certainly get more follow-through come next week. And the next area, likely target to the downside, would be in around the 57 area, and then around 54. So these are prices that we'll be looking at on the downside. If it can move higher and hold above 78, that would be a very bullish indication. So we also like to use the market profiles from the regular trading hours as well, and that's what you're looking at here. Each day has a lettered market profile and a volume profile. As far as our trades were concerned today, you can see our trades marked right on the chart here. These are the short trades with the down red arrow, and the long trades here with the up blue arrow. And the trades, out of all these trades today, we actually, well, we took them all except for this one. And the reason we didn't take this one is that even though we had a green filter, our resistance, as I said yesterday, was around 72. And as long as the market could not hold above there, as it was doing here, then we really had more of a downward bias. So this became our first trade over here, number one over here, and we did take this trade, and the reason being is that we had a barrier right here at 67 that we were working with. So we did go ahead and take this long trade here. This is trade number two. And our best trade of the day was this. You can see this little dash line right in here, and that got us short. So that was our third trade today. Having that preference with the market back below 67, we did not take this long trade because it would be very poor trade location with the long at 66 and change when we knew the potential barrier is around 67. And we did go ahead and take this trade as well over here, which was this long one right here. It hit our first objective but then sold off. Kind of rejection that we had on the lows here is pretty good. Not tremendous follow through from it, although not bad. So that's why we're saying the intraday bias is still to the downside. And as long as it continues to hold below 72 and 78, then we're going to have a preference for trading on that side. The market, today's low could act as support. As a matter of fact, potentially we've got support in around 64. If not, then down here a little bit lower towards the low of today, and then down to 57. So that's really what we're looking at for right now. If you've got any questions or comments or want to take a look at our longer video that we prepare for the members, just give us a call or send us an email. Our email is right here. So that'll be it for today. Thanks for watching the video. Have a great weekend, and we'll see you on Monday.